Whether EBITDA can be used in DSCR calculations, is it okay? Let's understand. DSCR, that is debt service coverage ratio, basically measures whether the cash profits are adequate enough to meet the loan repayment, that is payment of principal and interest. So here the question is, for cash profit purposes, whether we can use EBITDA, that is earnings before interest, depreciation, taxes and amortization. Let me refine the question, that is whether using EBITDA we can pay principal and interest. Is it possible? Or we can pay principal and interest only using the cash profit, which is correct. Let's take an example. Look at this income statement where the business has made a sales of 100 crore, incurred various expenses including depreciation, and after deducting all those we have earnings before interest and taxes, and after deducting interest what we have is earnings before tax. Then after deducting taxes we have earnings after tax. So here the EBITDA is basically this earnings before interest and taxes added back by depreciation and amortization. So in this case earnings before interest and taxes 25 crore and depreciation is this 10 crore. So 25 plus 10 gives you 35 crore, that is the EBITDA. And let's say the balance sheet has term loan repayable as 23 crore. Now let us check whether EBITDA is actually available for paying both interest and principal. Look at here, we understand EBITDA is 35 crore. Using that, this interest of 12 crore can be paid. So from 35, if 12 is paid, what is left over is 23 crore. So now it might look like using this 23 crore, this term loan of 23 can also be paid. But we have to understand this is the profit before paying taxes. And only the profits after taxes are available for loan principal repayment. So for paying the principal, we have to be dependent on this profit only. And this profit is influenced by taxes. So even though the EBITDA is 35 crore now, what is certain, what is real, what is for sure is out of 35, 3 crore will go towards tax payment. It means what will be available is only 35 minus 3, 32 crore. So using 32 crore, if this interest of 12 crore is paid, then what will be left over is only 20 crore, and with that this 23 crore cannot be paid. So look, EBITDA is deceiving. Yeah, EBITDA is deceiving as far as measuring the loan repayment is concerned. Using 35 crore, if we believe that both interest and loan principal can be paid, at times it can be deceiving because this figure is before taxes. So we have to knock off the tax. That's why banks, they won't go for EBITDA, rather they will go for cash profit, which is computed after tax but before interest. So what banks will do, they will take this earnings after tax. With that they will add back the depreciation, they will add back the interest as well. So 10 plus 10, 20 plus 12, 32, and this 32 crore is what here also I mentioned, that is out of 35 this tax of 3 crore will go. So what is left over is only 32 crore, and banks adopt that computation only. So instead of directly using EBITDA, they compute cash profit in reverse order like this, and now we can measure whether this profit is available for servicing the interest and principal. So out of 32, this 12 of interest can be paid, what is left over is only 20, and that is not adequate enough. So here the message is clear, because this profit on the face communicates that it is not adequate enough to pay 12 and 23. But this profit gives us an illusion that 12 and 23. What is 12 and 23? This interest and term loan. So this profit gives us an illusion that this can be paid. But the reality is, out of this 35, 3 will go towards taxes. So only what is left over is only 32. With that, this 35 cannot be paid. So whether EBITDA can be used for DSCR? Answer is big no. And here we go. Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents. multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.